Tonight on ABR, the Myanmar government has recently relaxed the rules governing the banking institutions, giving them more autonomy to facilitate more on-foreign investment. Laos has waived tourist visa requirements for Russian nationals to boost tourism in the fast-growing market for the landlocked communist country. The Chinese president warned against foreign meddling in the affairs of other nations during a speech in Moscow, sending a signal to the West and echoing a message often repeated by his Russian counterpart. Catch the latest on the economic beat within the region and stories from around the world with Sabahvasu Pathong and Jiravi Kitisin. This is ASEAN Business Report.
Good evening on Monday, March 25th, 2013. You are watching ASEAN Business Report, broadcasting live from Bangkok, Thailand. I am Sabahvasu Pathong.
And I'm Jiravi Kitisin, and tonight starting off with Thai stocks update, as the Thai stocks have snapped a 5-day drop after Credit Suisse and Morgan Stanley recommended investors to buy the nation's shares following the biggest weekly slump since the peak of 2008 global financial crisis. The benchmark SET index jumped 3% to 1,523.95 points this afternoon. And in its closing in Bangkok, the biggest gain in Asia. The measure is poised for its steepest advance in 9 months. Credit Suisse analysts said Thailand's equities will rebound as domestic liquidity and economic growth will lure local individual investors. The recent slide in Thai shares is overdone and offers a good buying opportunity. Now, economists also noted that a number of stocks have been oversold and offer attractive prices for investments. Most investors realized the need to buy back some shares to cover their positions after last week's panic sell-off. Thailand's stock index slumped 3.3% on March 22nd, the steepest loss since October 2011, on concern the bourse may raise margin requirements on trading. The exchange may increase the level of collateral that customers must maintain in their trading accounts to 20% of their credit line from 15%.
And on the relating matter, we are now up for a report on SET index target, the year's forecast. We are still keeping up on the economic situation in Thailand. Let's move on to the next top story. The foreign exchange market remains volatile with investors nervous after the recent big moves. The Cyprus deal, which is helping fuel a mini rally in Asian currencies. USD per Thai baht is at around 29.22 to 29.27. The baht was correcting yesterday with a weakening bias and ranging from 29.15 to 29.33. There was a lot of demand for baht at around 29.3, which prevented a larger move. There was reasonable buying interest in the local bond market over the course of yesterday. Yields ended lower by 1 to 5 basis points, with particular interest in the main benchmarks in the belly of the curve. Attention is also starting to turn to the central bank policy meeting on the 3rd of April, with the market pricing in slight odds of a rate cut.
And of course, we're going to have the more updates on the SET index, as the Thai stock is actually quite volatile these days, and we have to keep a day-by-day monitoring. But apart from that, another top story is heading towards the Western continent with Cyprus and its latest update. Now, the Eurogroup finance minister were satisfied with after the swiftly endorsed last-ditch deal clenched by Cyprus and its lenders to shut down its second largest bank and inflict heavy losses on uninsured depositors in return for the €10 billion bailout. The agreement came hours before a deadline to avert a collapse of the banking system in fraught negotiations between President Nikos Anastasiades and heads of the European Union, the European Central Bank, and the International Monetary Fund. The plan will spare the East Mediterranean island a financial meltdown by winding down popular Bank of Cyprus, also known as Laiki, and shifting deposits below 100,000 euros to the Bank of Cyprus to create a good bank. Deposits above 100,000 euros in both banks, which are not guaranteed under EU law, will be frozen and used to resolve Laiki's debts and recapitalize Bank of Cyprus through a deposit equity conversion. French Finance Minister Pierre Moscovici said the plan would solve the biggest part of the problems in the Cyprus banking sector that had threatened all the island's households. Laiki will effectively be shuttered with thousands of job losses. Officials said senior bondholders in Laiki would be wiped out and those in Bank of Cyprus would have to make a contribution. The EU and IMF required that Cyprus raise 5.8 billion euros from its banking sector towards its own financial rescue in return for the 10 billion euros in international loans. The head of the EU Rescue Fund said Cyprus should receive the first emergency funds in May. With banks closed for the last week, the Central Bank of Cyprus imposed a 100 euros per day limit on withdrawals from cash machines at the two biggest banks to avert a run.
And now, Kujeri, let's take a look on the key parts of the deal. Well, the Cyprus had to come up with 5.8 billion euros somehow to secure the bailout, and depositors in the country's second largest bank, Laiki, with accounts of more than 100,000 euros, will lose an unspecified amount of their money. And the move is expected to yield 4.2 billion euros overall, or most of the needed amount. And the remainder of the money will come from tax increases and privatizations.
That's right. And Cyprus had to agree to restructure its banking sector, which is unusually large for the size of its economy. Now, Kun Satapat, Laiki will be dissolved at once and split into a good bank and a bad bank. The good bank portion of Laiki will be folded into the largest bank, which is the Bank of Cyprus.
Right.
Laiki is the second largest. Now, what is the bad bank and good bank?
Well, by suggesting the two, the bank keeps the bad assets from contaminating the good, so long as the two are mixed, and it would be uncertain for investors about the bank's financial health and performances.
That's right. So in summary, the bad bank is a bank set up to buy the bad loans of a bank with significant non-performing assets at a market price. Shareholders, bondholders stand to lose the money from this solution, not depositors, and it is believed that this would be the best solution for an exit from a financial crisis.
And moving back, we are now up for a special report that I promised you earlier on the set index target, the year's forecast.
Until this past week, Patra securities had not witnessed a significant correction in equities for 9 months. However, from 15 to the 21st of March 2013, the SET index declined by 4%. Intraday on the 22nd March, the index has fallen still further, testing the recent resilience of the SET index. In the past 5-year declines have averaged 9%, been relatively quick, and the SET subsequently rallied higher. If there was a more extreme correction, similar to the third quarter of 2011, the SET could decline to 1,280. Whilst this is not the best case, the first parts of this report consider the risks which may prompt such a scenario. Specifically, these are an increase in the VIX or the Global Fear Index, high relative valuations, the strong BAHT, that a high proportion of volume is coming from non-institutional investors, monetary policy and medium-term inflation risks, domestic politics, and high expectations. Patra firmly believes that Thailand is experiencing a coincidence of profound changes which have the potential to boost medium-term growth. However, equity prices have also risen significantly over the past 12 months and notably significantly in excess of earnings revisions over this period. This suggests either that, first, equities were too cheap to begin with, and or second, that investors increasingly agree with Patra's view. For future outlook, Patra is maintaining the SET index target of 1,700 and look to buy the following oversold companies with the greatest potential upside to the price objectives given the latest share prices, in sectors where Patra expects the most business growth. Meanwhile, in Citibank Research view, current relatively high SET valuations reflect the return on equity expansion, earnings momentum led by domestic sectors, and imminent execution of the government's 2 trillion baht infrastructure investment plan. While Citi maintains its bullish bias over the medium term, it believes that the current valuations largely price in the investment-led growth story. Citi's top picks focus on laggards with attractive dividend yields. Overall, Citi maintained its 2013 estimate year-end SET target of 1,535 and SET 50 target of 1,095.
And now let's move on to the next top story. But still in Thailand, PM's Office Minister Niwat Thamrong Bunsongpaisan has confirmed that the draft 2 trillion baht infrastructure investment bill will be presented to the Parliament during the March 28th and 29th. Tisco Research said the current Parliament session is opening until April the 18th with a limited time frame. Tisco said it does not think the ruling Pheu Thai-led Parliament can complete its all 3 readings within this current session. Tisco expects only the first reading to be passed in the current session. Now the 2 readings would fall into the next session, which will be held during August the 1st to November the 20th. Tisco said it believes that the investment bill should go into effect in late 2013 at the soonest. Prime Minister Yingluck Shinawatra wrote in her Facebook today to defend the 2 trillion infrastructure project, saying that it would enhance Thailand's competitiveness, help create connectivity with the ASEAN region, improve the current country's transport, and bring major tourist spots under a convenient transport network. She also said as a result of the 2 trillion baht infrastructure project, the logistic cost will be reduced by 2% of the gross domestic product, or GDP. The economic growth will increase by 1% a year, and new jobs of 500,000 will be created.
Now, with the Parliament session is just around the corner, on the line with us tonight is Kun Kobsak Sabahvasu, the former Deputy Prime Minister on Economic Affairs during Kun Apisit's administration. Good evening, sir, and welcome to the program.
สวัสดีครับคุณจันลวีคุณสถาปัตย์ครับ
Can you explain, in your own opinion, about what do you think would be the impacts towards the country's public debt with regard from this budget bill, which would take around 50 years to repay?
Well, the government plans to borrow 300,000 million baht a year, in addition to the normal budgeting, yearly budgeting, which they have been borrowing about the same amount each year as well. So we're talking about 600,000 million baht a year. When you look at the public debt, it's always measured as percentage of GDP.
Mm-hmm.
So as long as the government can drive up the GDP, the public debt ratio will not be increased. That's what the government is saying, so we should not be worried about it. That's what they say. So the question is whether they could maintain the increasing of the GDP like 6-7% a year for the next 10 years or 20 years or so. If that is the case, then it shouldn't be any problems. But one has to look at it whether that's possible or not.
Right.
คุณกอบศักดิ์ครับ
Yes.
Yes, you can go on.
Then you have to look back and see why are you doing all of this? What's the bottom line? I think the bottom line is for us to be competitive. And if you want to build a high-speed train, and you plan to spend, I think, about 1 trillion baht just for that. You will have to ask yourself that Thailand will be more competitive with the high-speed train, because when you talk about a high-speed train, you're not talking about cargo train. You are talking about passengers train. And I don't know. I don't think we can afford that. You know. So we'll be borrowing so much money for something that it's nice to have, but maybe it's not the proper time. So what you spend during the next 7 years, definitely there will be a shortage of labor. The price will increase. I mean, there will be a boom. You know, GDP would go up. But after the spending program is done, then what? Will you be able to make more money for the country because of the high-speed train? I don't think so, you know. I think what we do need is a cargo train, be better, more efficient, and a better system than what we have today. I mean, that I would totally agree with that. But not high-speed train from Bangkok to every part of the country. I think we're not that wealthy enough to do that.
Well,
Right.
so Kun Kobsak, what do you think is the government's motivation? They say it allows the project to get full funding in case of political instability.
Well, investment in infrastructure is always a good thing, but one cannot do everything all at one time. One need to you need to prioritize it, you know. Everything has to be priority, you know. You need to write down what you want to do, and then you say, the first year you do this, the second year you do that. But you don't say, we're going to do all of it within 7 years, and then we're going to borrow this much. And then we said that we will have enough money to pay what we borrow for the next 50 years. That doesn't make sense. I mean, if you consider Thailand as a company, that will not make sense at all. So I couldn't find a reason why, except perhaps people like to have high-speed train. It sounds good, you know. So if you can do something like that, maybe people like it, but they don't know that we have to, at the end, their kids will have to pay for it.
Right. Now the government has several policies in its hands, which is also they have to repay the loans, and such as the rice pledging policy, the first car policy. Now, when we're talking about the infrastructure policy, do you think there is any other ways that the government could go through with the budgeting process?
Well, there are many ways of doing this. We have our railway system, which is over 100 years old, and it's outdated. It's old. You need to do double track. You need to change the tracks. You need to change the rolling stock. I mean, the whole bunch. But you cannot do it all within the next few years. You don't have the manpower to do it. So you definitely can use the normal budgeting to help the state railways to modernize our railway system, and that would be so good for the cargo. That would be what we need for the logistics, not for the people. The people have many choice of traveling. Once our country is competitive, once we have more middle-class earner, then we can start thinking about the high-speed train all over Thailand. But not now, not the next 5 years, not the next 7 years. We can have one line which during Kun Abhisit's government, we were negotiating with China. And that particular line is basically for bringing tourism from China to Bangkok and then go down south to Malay and Singapore. And this is interesting because we don't have to borrow money. I mean, we only use our budget, put it down as an equity in the joint cooperation between Thai government and Chinese government, and then let them handle the borrowing and do it on commercial basis.
Right.
So then you don't have to borrow anything. I mean, you do have to borrow, but you don't borrow as a government. You let the company that you form with the Chinese government do all the borrowing, and they can borrow money from China with 2% interest or less within the next 20 years loan payment, and you don't have to we as a taxpayer don't have to use our tax money to pay for that. Something like this can be done. So the government is not very clear on what they want to do. I think if you ask the people today, what is the high-speed train? And I bet they were looking at the bullet train. And I know for sure that they are not going to build the bullet train because it's so expensive. So, it actually is not the high-speed train. It's just the normal speed train. What we have in Thailand is substandard speed train. You see what I'm saying here? Yep. The normal speed train is about 150 kilometers per hour. But I think the high-speed train in our mind is something like 200 or 300 kilometers per hour. And this is not the case. If it is the case, then I think we're in really big trouble here because we don't need that.
Okay.
Right.
Okay.
Thank you so much, Kun Kobsak, for joining our program tonight.
Okay, thank you. Bye-bye.
Bye. And now we're going to take a short break after we come back for more regional news as good news for Myanmar and those traveling there, as there may be more ATM machines later. Follow up more after this break.